Home prices ticked up in some major markets last month as buyers competed for a limited number of listings, including in Toronto, where home prices were still down in April compared to a year earlier, but have progressively increased the past couple of months. For more perspective, we're joined by John Pasalis, president and broker at Realosophy Realty. Thanks so much for coming in today, John.
Sure.
Always great to get your thoughts on the numbers because you dig into stuff beyond the headlines here. What are you seeing on the listing side of things? It sounds like people are still reluctant to get out there and sell a home.
Yeah, I mean, definitely that's really what's driving the market right now. It is this sort of negative supply shock, if you will. I mean, new listings are down nearly 40% over last year. You know, some markets for low-rise home are down 50, 60%. And the big factor right now is that a lot of people just aren't upsizing. A lot of sellers, of course, are people who are moving to other homes. And we're not seeing a lot of that, partly because it's more expensive to upsize. Rates are higher. And a lot of people with variable rate mortgage will have to reset their mortgage payments and probably increase their payments. So that's probably limiting a little bit of the inventory right now.
So are you seeing more activity then in, say, the condo market right now versus detached homes, or how is that sort of shaking out?
Yeah, I mean, the low-rise market, so the market for semi-detached, detached, row homes is definitely significantly more competitive than condominiums. That's the market where we're seeing more price pressure. We're seeing, far more competition, homes getting, 10, 15, 20 offers on their offer nights. I mean, even luxury homes that are priced well are selling in a couple days. So definitely more competition there, more price pressure. The condo market's moving, but prices have been relatively flat since July, so we haven't seen as much upward pressure.
What is the competition like? I mean, it sounds intense, but how does it compare to the competition that we saw, even this time last year?
Yeah, it's not on the same level. I mean, this time last year was definitely far more exuberant. The price growth was far more rapid. And again, I think part of the reason we're not seeing as much, even though prices are rising, we're not seeing as much pressure as last year, partly because rates are so much higher and it's harder for people to be overly aggressive on pricing. So it's not as exuberant, but we are starting to see sort of these early signs of this whole fear of missing out. If you're a buyer and you've lost out on 5 homes, that 6th home you're going to bid on, you're going to be a little bit more aggressive on.
Yeah, I wonder when it comes to that FOMO, where do you think it's coming from the most, in terms of having to do this right now? I guess it's all personal circumstances when people are buying and selling, but the Bank of Canada pausing rates, I understand, had a big impact on getting people back out and trying to make a purchase. But where do you see it coming from?
I mean, it's a great question. I mean, really, it's driven by, we had this flood of buyers coming back into the market. The sellers didn't show up. So we have this very tight competitive market. And a lot of the buyers, quite frankly, right now are just end users who want a home, and they see prices rising. They're worried prices will continue to accelerate if the bank cuts rates. I mean, even though they probably won't this year, there is this fear from them. And then, of course, they hear constantly in the news and headlines that we're just not building enough homes for people, right? So there is this feeling like, well, I got to buy a home now, otherwise I may not be able to afford one. And even though rates are high and even though prices are high, that is kind of a bit of the mindset we're seeing right now.
How seriously do you think people should be considering those headlines about supply? And, we hear it reiterated from politicians all the time that we're not building enough homes. So should that be a consideration for people?
I mean, I think it is a factor, but I think we need to be cautious because I think what's happening right now is very possibly, if prices continue to accelerate, it's probably an overreaction by the market due to this tight inventory. Like, prices should not be accelerating right now the way they are. And the market's just reacting to that. So if we had sort of a normal volume of listings, price would be probably pretty flat. So you don't want to be overly aggressive in this market.
So with the spring market, if we do see more listings coming on, do you think then that we might see prices sort of level out here or, not continue even and they haven't been huge increases, but these ticks up.
100%. I mean, I think that's going to be the biggest factor that could take some of the pressure off of the housing market. I mean, the low-rise market, average prices have gone from 1.3 over the past 6 months to over 1.4 now. So, it's not a huge bump, but, we're seeing some acceleration. If we see an increase in the listings, that'll definitely take some of the pressure out of the market.
Do you think that we will?
I don't think we will. I mean, for many of the reasons I talked about, the reasons that are keeping upsizers out of the market, because if rates don't change anytime soon, it's going to be a lot harder for people to move up to that next home. And that's going to kind of keep the inventory out of the market for the next little while, at least probably till the end of the year.
I'm curious about, you talked about the end users who just want this house to live in, a roof over their heads. What about the investors that have played a significant role, particularly in a city like Toronto, in buying and selling condos here? What are you seeing on that front?
So they're not quite active right now. So, and that was one of the big differences between this year and last year. I mean, they drove a lot of the demand during the COVID boom because rates were so low. Investors are not overly active right now just because nothing works at 5% mortgage rates in terms of cash flow. Many of them are holding on. We're not seeing a lot of distress from investors, which is interesting because that is usually the first thing that you would expect to see happen, and investors unload their properties as rates went up. But we're not seeing much because the banks have been very accommodative. They've been allowing investors to basically, and homeowners, to extend amortizations on their mortgages, to have negative amortizations if they had fixed payment variables, so they're not forcing them to increase their payments. So they're in a good period right now where they're not feeling that payment shock. But once they have to renew their mortgage, well, then we'll see what the investor market's like in terms of what impact that might have on listings, because if they have to renew at today's rates, we might see more investors selling. Yeah,
I wonder if you've looked at these sort of interest rate cycles and the impact on, or just how long it takes for people to be in that position where, okay, I made it work for however many months, insert months here, but I just can't, stretch things, and then I'm going to sell. I'm going to give up on this one.
Yeah, I mean, I think the challenge is that, I don't think everything is, today is equal as it in the past. I mean, we have OSFI and the banks kind of, I don't want to say changing the rules effectively as we're going. I mean,
trying to.
Yeah. I mean, in a normal environment, we don't allow, negative amortizations on mortgages where, your payment doesn't even cover your interest. And we have that today. And even on renewal, we already know banks are going to be working with their borrowers to potentially even extend their amortization. So if they're supposed to renew at 20 years, maybe they'll let them go to 35 or 40 to soften that payment shock. So this is what makes it very hard to predict how the high rates are going to be impacting investors, because, again, if banks are working with them to soften that payment shock, we might not see much distress from them.
That public consultation period also recently wrapped up for changes to borrowing rules or lending rules, that kind of thing, with OSFI. So what are your thoughts on that? What kind of impact? I mean, the timing of it? What do you think?
Yeah, I mean, I think we're seeing a lot of that happening right now. And I mean, we'll have to see what ends up happening. But I think, again, I think the big thing right now and the big factor is to what extent are banks going to be working with existing owners and existing investors on renewal. We know that they're working with them right now, especially that variable rate mortgages. But to what extent are they going to allow extending amortizations to soften these shocks? And I think that's going to be a big factor that's going to impact sort of the resale market over the months ahead.